Salam, everybody. This is Investor Shake back at it again with another video. I will be doing a giveaway at 500 subscribers, so if you're new to the channel, please click on that red button. Today's halal stock pick of the week is the SP Funds S&P 500 Sharia Exclusions ETF, ticker symbol SPUS. Stock price is at $29.56. I have covered this ETF multiple times on this channel, but as a quick refresher, this ETF tracks the S&P 500 while excluding certain stocks that are involved in non-Sharia compliant activities such as defense, banking, etc. And it has 212 holdings, and it consists 41% tech, 15% healthcare, 10% communication, 9% consumer cyclical, 7% industrial, 6% consumer defensive, 4% energy, 2.9% basic materials, 2.14% in real estate. And the top 10 holdings consist of 45% of the ETF, with majority of the holdings being in Apple, Microsoft, Google, Tesla, Nvidia, Meta Platforms, Johnson & Johnson, Procter & Gamble, and Home Depot. This ETF does have an expense ratio of 0.49%, meaning for every $1,000 you put into this ETF, you're paying $4.90 every year. And the dividend yield is at 1.04%, which isn't a high yield, but this is a pretty good yield nonetheless. And not to mention, you also receive this dividend every month, as opposed to receiving dividends quarterly in individual stocks. So that's one thing to keep in mind. So looking at the stock price, the past 3 months, it is down 10%. It was as high as $34 a share back in December 27th. And since then, it has had a gradual decline. And this is due to the market in general. A lot of growth stocks are falling significantly from their all-time highs. And we are in a bit of a bear market right now. There's a lot of discounts in the stock market. And it's possible that you may have bought a stock at a pretty high price. So this would be a good opportunity to dollar cost average. So right now it's at $29.56. But keep in mind that if you were to look at it in the long term, you'll see that this ETF has grown consistently throughout the years. And this is something that you would expect from the S&P 500. It will go up gradually over time with some short-term volatility here and there. But if you have a long-term mindset, this is a pretty good ETF to hold for the long term. However, this is not financial advice. Now, I have talked about this ETF multiple times, and I have made myself a challenge last year to get 100 shares of SPUS, which I have done. And I am going to start that goal again for 2022 to have 100 shares invested in SPUS. Now, to be more transparent, I did have a large position of SPUS in Robinhood, and I ended up selling it because I had to pay some bills. And as you can see, I previously had 153 shares for a total of $4,661. This was back in October, with an average price of $30.40. So with the ETF currently being below that, this would be a good opportunity to accumulate some more shares over time. So for 2022, I will consistently invest in SPUS and accumulate a position over time. And hopefully we'll reach 100 shares or and beyond later this year, inshallah. Now, one thing to note about the ETF is the monthly dividends. So in my Charles Schwab account, I do have shares of SPUS. And as you see, I'm getting dividends every month. The 6th, December 31st, January 28th, February 28th. So I was receiving 13 cents each month. But this was from a 5-share position out. It's a pretty small position, but theoretically, with the more shares that I purchase, I should expect larger dividends each month. And then this is the dividends from my Roth IRA, which I have shares of SPUS in, which is a slightly larger position at about 15 shares. So in total, I have about 20 shares of SPUS. So I'm 20% of the way there, and I'm going to gradually add more shares. So far, I received a total of $1.13 monthly dividends, and you see it was 10 cents and 31 cents and 42 cents as I am gradually increasing my position. Not to mention there is a long-term capital gain distribution at the end of the year, which is pretty common in some ETFs and mutual funds. They may have excess cash which they may give you at the end of the year, which is considered a capital gains distribution. So all in all, this is a pretty good ETF and one that I like to hold for the long term. Now, as always, this is not financial advice, so please don't buy this ETF simply because I'm talking about it. Please do your own research, and if you like what you see, consider adding it to your watch list. This is Investor Sheikh, checking out.